Wall Street took a hit overnight with all three major indexes closing in the red. The Nasdaq dropped 1.9% to 25,437.84. The S&P 500 fell 1.14% to 7,321.65. The Dow Jones was down 0.66% to 50,454.74. Tech stocks bore the brunt of the selling. QQQ lost 1.85%. Nvidia fell nearly 2%. Tesla dropped more than 3.6%. And MSTR tumbled almost 7%. The VIX fear gauge rose 1.74% to 19.25. Market sentiment has moved from slightly below normal to the upper end of the normal range. Pre-market futures are pointing to more weakness. Nasdaq futures are down 1.59% and S&P futures are off 0.75%. The sell-off was driven by a double whammy of escalating tech restrictions and concerns over the Fed's interest rate outlook. On the global macro front, the 10-year Treasury yield edged lower to 4.546%. The slight decline reflects some safe haven buying, but yields remain above 4.5%, signaling no easing in nominal liquidity conditions. The VIX at 19.25 sits in the middle of the 15 to 25 normal range. This suggests caution but not panic. If the VIX breaks above 22, we would shift to a defensive posture. The dollar index fell below 100 to 99.84, continuing its recent weakness. A weaker dollar helps ease capital outflow pressures from emerging markets and provides indirect support for Chinese yuan assets. WTI crude fell 2.62% to $87.77 a barrel. Brent was down 2.44% to $91.12. The drop in oil prices was driven by rising hopes for a Middle East ceasefire and global demand concerns. This is a short-term positive for cost-sensitive sectors like airlines and shipping. Spot gold declined 1.07% to $4,313.3 an ounce. The weaker dollar failed to lift gold prices as safe haven demand was offset by tech selling and rate pressure. Turning to China, the onshore yuan traded at 6.7724 against the dollar and the offshore rate was 6.7750. Both appreciated slightly. China's May export surprised to the upside, growing 19.4%. This gives the yuan more upward pressure than downward pressure in the near term. A stronger yuan is generally positive for northbound capital flows, but we need to watch for the negative impact of tech restrictions on foreign investor sentiment. On the trade front, the U.S. Defense Department added Alibaba and BYD to its Chinese military company list. New contracts with the Defense Department are banned starting June 30, and third-party procurement will be banned from 2027. The U.S. Bureau of Industry and Security issued new rules requiring Chinese companies, including their overseas subsidiaries, to obtain export licenses for NVIDIA Blackwell and Rubin chips as well as AMD MI350X series AI chips. And the USTR announced a 12.5% additional tariff on Chinese goods effective July 1. These combined factors continue to pressure tech stocks with overseas exposure. For today's A-share market, we expect a small gap down of 0.3 to 0%. The overseas sell-off is weighing on risk appetite, but the yuan strength and yesterday's strong rally in Chinese stocks provide a buffer. For the A-share market today, the Shanghai Composite is expected to trade in a narrow range with a gain or loss of less than 0.5%. The Chi-Next board may see an initial rally followed by profit-taking after yesterday's nearly 4% surge. The key sectors to watch are AI hardware and semiconductors. China's May integrated circuit exports grew 19.4% year-on-year. NVIDIA's strategic partnership with SK Hynix is boosting HBM demand. This provides clear catalysts for the AI computing chain. The airline sector also has room for valuation repair. The 2.6% drop in WTI directly lowers fuel costs for carriers, and the summer travel season is approaching. On the risk side, stocks added to the Chinese military company list like Alibaba and BYD face short-term ban impacts and potential active reduction by foreign investors. Apple concept stocks and traditional energy names should also be avoided. Northbound capital flows today have about a 55% probability of being net positive with an estimated range of 20 to 50 billion yuan. So here is the bottom line. A stronger yuan and strong tech export data provide support, but overseas tech selling and the sanctions list cap the upside. Expect a choppy session with focus on AI hardware and airlines. Our probability assessment for today is 30% chance of up, 50% chance of sideways and 20% chance of down.